We just got some good news on the labor market front. The jobs and unemployment report numbers for November just came out, and it showed that the number of job gains was slightly higher than estimated, coming in at 199,000 jobs for the month of November compared to 190,000 estimated. But the unemployment rate actually ticked down from 3.9% to 3.7%, which is good news. Those two things together show that the labor market is still strong and resilient in the face of high interest rates from the Federal Reserve from last year into early this year. Honestly, my overall takeaway is I think the market was starting to get ahead of itself a little too quickly in terms of rate cuts because this still shows that the economy is strong. Average hourly earnings ticked up 0.4% month over month and 4% year over year, slightly higher than expected, which is good news. But I think this will likely keep the Fed on watch a little longer, or at least possibly delayed rate cuts. But either way, this still shows a resilient economy. We have higher labor force participation rate as well, and an increased labor supply is what's needed in order to ultimately bring down inflation. The labor force participation rate was 62.8%. So overall, I would say this report is good, slightly on the hotter side, but it still shows that the economy is strong. The market's reacting to this report pretty well, at least as of this morning. Obviously, we have to see where the market closes for the day, but I think the main reason that the market's reacting to this report well is actually out of that 199,000 jobs added, 47,000 jobs were auto-related jobs and workers coming back from the strikes. So if you subtract those gains in the labor market, then the job gains for November are actually lower, closer to the 150,000 range. So maybe the market's parsing through that data. And then if you want to view this a little bit more bullishly than I said at the beginning, is that the Federal Reserve might not necessarily care as much about the labor market right now being stronger than expected. Their priority at this point might just be, as long as inflation gets to that 2% level, even if the labor market's strong, that might be all what they need in terms of cutting rates. I think March of next year in terms of rate cuts might still be a little too early, but it's certainly possible. We also had University of Michigan consumer sentiment data come out this morning at 69.4, higher than the 62 expected, which is good news. And then 1 year inflation expectations actually dropped to 3.1%, which is good news. And the market might be parsing through that data as well. I also wanted to touch a little bit briefly on AI. Google announced their competition to ChatGPT called Gemini, which helped Google stock pop yesterday. And then we had AMD release their AI MI300 chips competing with NVIDIA, which helped AMD pop. There's a lot of hype in the markets about AI, and rightfully so. Dan Ives, famous and notable tech analyst, says that companies' AI spend next year will be a key driver in the stock growth for AI and software-related companies, and that should likely help the tech market in general next year. And then another one of my favorite analysts, who's also probably known as one of the most bullish analysts on Wall Street, Fundstrat's Tom Lee, thinks the S&P 500 could hit a level of 5,200, which would be about a 13% upside from today for 2024. He thinks he could hit the market could hit 5,200 for the S&P 500 by the end of 2024. That's the most bullish forecast on Wall Street right now. And I kind of agree with him, and I wouldn't be surprised if it hit 5,400, considering what's going on in the market, especially with technology leading the way, because we still have to see small and mid cap stocks really start moving up a little bit more, and that'll likely help the S&P 500 as well and push that up next year. I think ultimately 2025 there might be some weakness. We might see a flat year or a year that's down about 5% in 2025. But I expect 2024 to be pretty strong and resilient. And the end of this year, I still expect the Santa Claus rally by the end of 2023.